The SMSF space is something that is hugely untapped into still as far as investing in property goes. I'm not a financial planner, I can't give advice, but the benefits of buying property in super, I mean, where else can you buy investment property and not pay any capital gains tax? Where I see a lot of people go wrong, they talk about wanting to invest in positively cash flowed properties in their SMSF. You're not paying any capital gains tax on the growth of the property if you are selling it at retirement phase. So why would you ever sacrifice growth in property when buying it in your SMSF for $5 a week extra in positive cash flow? Trying to set up an SMSF yourself, it can be very time consuming. Some clients that I've come across who said they've tried to set up an SMSF themselves and really weren't successful and just had no clue what they and probably wasted 6 months of their time.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Hey guys, just a quick disclaimer and just a reminder that this is not personal advice. So make sure you speak with a licensed advisor before making any investment decision. James Anderson from Bluestone Property, welcome to the show. Maybe share with us a little bit about how you got started in the property space and a little bit about your background.
Yeah, it's quite funny whenever people ask me about my background. I suppose my old man was in commercial real estate, sort of institutional sales. And as a kid, I always used to say, I never want to get into property. I never want to do what you do. I want to go my own path. And, I don't like people who work in property. I think it's too slick and cunning, so on and so forth. And then in year 11, I went over to the US to finish studying, playing basketball on a scholarship over there. So I did my last 2 years of high school and 1 year of college, playing basketball in college as well. And it was during my first year of college that, a lot of peers and friends, teachers used to ask me, well, what do you want to do with yourself? And, at the time I was always thinking sort of finance or stockbroking, but a lot of people used to tell me, like, you'd be really good at real estate. You'd be really good in property. You've got the personality for it. And the more I heard it, the more I thought about it, and I thought, it's hard for me to deny that I would be interested in doing some sort of property. And then eventually I came around to it. When I came back to Australia after my third year being overseas, being after my first year of college, I decided to come back and finish my university studies in Melbourne, doing real estate, property and valuations. At the same time, I was sort of doing a internship for 3 months at CBRE in Melbourne, so commercial real estate. But as soon as I got back, so I was 20 years old at the time, and then got into just before I was 21. Sort of after that 3 month stint, got into sort of investment structured sales, doing the new build stuff for a company in Melbourne, where I became the sales manager after about 6 months' time at just 21, and I was a young fella managing guys who are 40, 50 plus years of age. But we were doing, big numbers there. Before ultimately, segueing into my own property advisory and buyer's agency business now 5 years ago, when I was 22.
Yeah, that's great. It's a good story. Obviously, heading over to the States as a kid and having that experience and that exposure to living and educating yourself overseas and abroad in the US. Do you think that sort of brought forward your sort of maturity levels and things like that?
I definitely feel that living abroad sort of furthered my independence levels. I was obviously, as in high school when I was moved over there, I was 16, 17. I was, living without my parents and sort of had to fend for myself. And the basketball side of things is very competitive and very dog eats dog over there. A lot of
Yeah.
egos and sort of no sort of tall poppy syndrome the way there is in Australia. So I think it really probably added a bit of steel to my skin, and as I said, furthered my independence levels. But I think what it really did, from the most part, was really just help me come out of my shell. I think as a lot of young guys, particularly in Australia, they go through the high school system and it's quite rigid and structured. But in America, like you probably understand, the personalities are so much different. Over there, you're really encouraged to sort of be yourself. So I think it really helped me come out of my shell and build up, the start of the personality that you see today, which you yourself know somewhat quite well. So
Yeah.
yeah, I think that was probably the biggest thing. I truly believe that if I didn't go to the States, that I wouldn't be here running my business today. I think
Yeah. Right.
the personality and the just being able to find yourself and what you want to do is really what got me going over there.
You talked about you started Bluestone about 5 years ago, helping clients purchase
Yeah,
property, and part of that strategy is helping finding property for clients through super. Can you sort of tell us
yeah.
a little bit about that journey and a little bit more about that particular strategy and your experience in the past, using setting up funds and how
Yeah.
you found that sort of experience in the past and sort of how you find that experience now, I guess.
When I set up the business, we were really just helping investors and first home buyers purchase, brand new property, because that's what I was used to. In 2022, so now 3.5 years ago or so, we opened up the buyer's agency side or arm of the business where we're helping people purchase existing properties. And it
Yeah.
really, I had experience in the past when I was working at my previous company doing SMSF, but it really wasn't until 2 years ago now, 2023, that we started doing SMSF stuff at Bluestone. And obviously, a big part of that, was because we started working with yourselves. I had experience in the past with purchasing property in SMSF. As I said at my previous company, we would just go through a financial planner. Um, and they would take 2+ months to get everything set up, and I felt that the processes weren't as clean as yours. But since 2023, dare I say the start of 2024, now, you know, 2/3, 60% of our business is doing SMSF purchases for clients. And I think that the SMSF space is something that is hugely untapped into still, as far as investing in property goes. And yeah, as I said, sort of 60-70% of our purchases are in SMSF. I just think it's a great space for people to be purchasing property. And, obviously a huge part of that has been working with closely with yourselves.
Yeah. No, that's good to hear. And I guess you've talked about working with a financial planner in the past who may take a little bit longer. I suppose, when you've got that advice piece in the middle, it does, there's fact finds, there's risk profiles, there's statements of advice, and there's obviously things that go along with when you are providing advice, which obviously does slow the process down. And that, I guess, can probably impact the ability to move quickly on, if you are looking to purchase a property, they're typically in high demand. You do run the risk of losing, that property if it is taking sort of a longer time, I guess. Is that sort of, did you find sort of that was happening at all, or?
When I was doing it previously in my old company, we were only doing brand new purchases. We were actually signing contracts before the SMSF had even been set up. Um, and yeah, I sort of wasn't in tune with it as well. I sort of just did the property side and let the rest go to the financial planner. But I think they were buying the property and or a nominee and nominating it to a SMSF. I just feel that it was probably not as clean as having everything set up first. But you know, if they weren't signing contracts from the get go, I can absolutely see how that would have delayed the process, and you'd probably miss out on a lot of really good opportunities, particularly in a rising market like what we're in right now.
And obviously, during that time, you've helped hundreds of clients purchase property through super. What what sort of do you have any sort of examples of sort of clients that have purchased a few years ago where they purchased for X and you've had it revalued of late? Have you got some of those examples that you could sort of share with us, some of the listeners, around just some results that some of your clients have been able to achieve?
Absolutely, yeah. I can think of a couple straight off the bat. You know, we're doing circa 50 plus purchases a year, so we've got a few. We did get one revalued recently. It was in Victoria, that we purchased. What was it, about 14 months ago? So back in the late end of 2024. We purchased a townhouse in Victoria for $600,000. And we actually recently had that revalued a couple of months back now. That's grown to 690,000. So, you know, 90K, which is, 15% or thereabouts, on a 600K purchase in, you know, just over 12 months time. And then when you compare this to the kind of growth that you see in standard, you know, funds, say Australian super, it's night and day, isn't it?
Yeah, well, I guess when you look at you're talking about 15% of the asset value has increased by 15%. But when you're looking at the return on cash, the money that was actually used, on a 600K property, that they probably put in 20 or 30%, or at least 20% anyway. So 120 to 180K. Do you know roughly how much they put in as a deposit, or?
About a 20% deposit.
Yeah,
So
so
20%
yeah,
on 600
yeah,
would have been 150
yeah.
or
So on
thereabouts, a bit
150
under.
or 100, 120 or whatever the case may be, um, you know, it goes from 120 and they've added 90 of value. It's sort of almost, what's that in terms of gains? It's what's that, a 75% increase in the cash that they've initially invested, something like that. So in
Yeah,
what, less than a year.
just over
So
a
yeah,
year.
it's
Yeah,
yeah. So I can see how that how that strategy, why clients use that strategy, and as we've had clients that have been using that strategy for many years and have done obviously quite well.
as
But
someone who works in property, I tell people all the time that if you've got the capacity, i.e., the balance, to purchase property in super, you would be stupid not to, right? Obviously, I'm not a financial planner, I can't give advice, but the benefits of buying property in super, I mean, where else can you buy property and not pay investment property and not pay any capital gains tax?
nowhere.
Right.
Yeah.
And
Yeah.
when you look at the way that a lot of super funds are projected to grow, in their standard industry and retail funds, and compare that, when I compare that to the way that property grows, say at an annual growth rate of 8% compounded per year over a span of 10 to 15 years, it's a no-brainer. Like, you can really see the numbers when you crunch them, and they really do stack up in favour of property. And Australian real estate has always been a very, very solid investment. And I believe it'll continue to be a solid investment moving forward.
Yeah. I mean, especially when you're looking at the immigration numbers and people coming into the country and even interstate migration. You add all those numbers together, and there's still quite a huge shortfall, isn't there? Like all around the country, that seems to be vacancy rates seem to be at record lows, and the demand is you have people lining up to renting properties, and there's always when there's an auction on, there's it just seems like it's almost like the perfect storm at the moment. Are you finding that with the rates? We've seen we've seen the rates sort of cycling down. I'm not sure how much further they'll cycle down with the inflation the way it is being a bit sticky, but are you sort of still the confidence levels? You're still finding the confidence levels are still there, and the demand is still insatiable.
Hugely. This year has been our biggest year in business by about 3x, right? Which is 3x on last year. And I think you've got a really interesting point in the market now where you've got rate cuts earlier this year, and you've got the 5% first home buyers scheme with no lender's mortgage insurance, which has, there's now no cap on income for that. Their prices, price caps for the purchase prices have now increased. There's been no cap on the number of positions for it as well. What that's done, everyone's sort of seen this and gone, well, it's a perfect storm for property prices to continue growing. And then you've also got an interesting case in the market where Melbourne is extremely undervalued, and sort of being a local to Melbourne ourselves and our business being based out of Melbourne, this year Melbourne has just gone bananas. We've purchased in markets where you could have gotten into the market earlier this year, say 10 months ago, for $700,000. Now in that same market, that $700,000, you won't be buying for less than $800,000. It's ridiculous.
Wow.
So yeah, I mean, regardless of whether interest rates are continuing to be cut, I think a lot of people understand the general nature of the property market. And at the end of the day, two things or two drivers of the property market will always be cost of and access to debt. And the cost of debt, if that's going down and access to debt is seemingly okay, I mean, property prices should always increase in the right areas.
Yeah, you have to agree. Yeah, it does seem like if you give anyone access to cash, that immediately in regards to borrowing for property, the more you give them, typically the more they'll spend, and that's obviously just because it is getting so expensive now, isn't it? Like, are you finding that's obviously stuff that was 700 is now 800? Are you looking at any other states? Like, what other states are you looking towards, and where do you see the where do you see the hotspots in the sort of in 2026? Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode.
I still think that Melbourne / Victoria is probably the best pocket to be looking at. That being said, it's not about shooting a dart at a dartboard, the dartboard being Victoria or Melbourne, and seeing where it lands. You still need to be quite astute with your data and understanding, owner-occupier rates, vacancy rates, and 10-year growth rates. I think Victoria is by far the standout, just because we're at a really interesting point in the market where Brisbane's at an all-time high, Perth is at an all-time high, Adelaide's at an all-time high. I mean, Sydney's always at an all-time high, just about. But Melbourne's sort of sitting 4 or 5% below its peak. But the key economic drivers behind Melbourne haven't changed. It's really just off the back end of negative sentiment behind the land tax thresholds and I guess off the back end of COVID still. So I think that there's so much opportunity, even, at least for the first half of next year, assuming the boat doesn't sail, to purchase in Melbourne or Victoria.
Yeah, Victoria does seem to be undervalued. I know Brisbane has just sort of overtaken Victoria in terms of median house price, I think, just recently, and which was a bit of a shock, I guess, to most. But Melbourne does seem to be a little bit undervalued at the moment. There's still, as you say, there's plenty going on in Brisbane as well. There's obviously still some economic drivers and fundamentals there that are driving the market. But Victoria does seem to be still quite undervalued. You don't know what you're getting in Brisbane now for 700. It's nothing brand new. Or if it is, it's sort of, you have to go a fair way out, I think, to get, and it's probably going to be a townhome or something like that. But certainly, yeah, Victoria does seem to be quite undervalued still, doesn't it?
Oh, absolutely. And I mean, Brisbane's got the 2032 Olympic Games coming for it, right? And historically, when you look at the decade leading up to the Olympic Games in most major cities in the past, housing prices have been affected. But, Brisbane just went on such a generational run over the last 5 years. Again, also off the back end of COVID and also off the back end of, the Olympic Games being announced. So there still probably is a bit of room up there, but I just feel that it's gone on such a run the last 5 years that I couldn't exactly put my finger on what it's going to do over the next 5 years. One would think that the Olympic Games should drive some good economic and infrastructure development in the city, though.
Yeah, I think that's still plenty of that happening, and projects that haven't even started yet. And there'll still be, I think there's still a huge shortfall in housing in Brizzy, and as I said, I think there's still some fundamental drivers there, like the Olympics, and obviously they'll need workers, to come and complete some of these infrastructure projects and some of these other projects the taxpayer funded projects for the Olympics and infrastructure in general. But just living in Brisbane itself, it doesn't seem like it's slowing down. It seems like it's still sort of still pushing forward. But I guess
Yeah.
time will tell whether those drivers will continue to keep driving up those prices. Is there anything else, James, where you see, like, do you still see SMSF being sort of a major part for 2026 for you guys? Are you sort of still finding clients are sort of steering, are interested in that? You think that'll still be a demand in 2026?
Yeah, absolutely. I really think, as I said, that more people should tap into it. But I don't think it is something that is widely marketed towards and publicized. I think that's something that if it was better marketed and as I said, publicized, I think a lot more people would be getting on board. But yeah, I think now as more and more people have been switching over to an SMSF and a lot more people are talking about the benefits of buying real estate in SMSF, I see that there certainly won't be any dip in the number of clients that we're going to see buying property or setting up an SMSF for that reason. I still think it's a fantastic avenue to be buying property in. And I'd encourage everyone to look into it if they have the financial capacity to do so in their SMSF.
Yeah, I think when you combine the advantage of gearing and then obviously the tax benefits of being tax free in retirement, I mean, it's hard to. There's not many other strategies that I've seen personally that I mean, you've obviously got crypto, which is obviously another booming asset class that a lot of investors are sort of diversifying into and having some exposure to. That's obviously growing massively as well. So, but those sort of two strategies seem to be just the flavour at the moment. I think everyone's sort of jumping in and gearing and buying property and crypto as well, and with those, obviously the taxation benefits it's hard to beat it's hard to beat as a long-term investor hard to beat as a
No
long-term
question, and
investor.
I think growth is just so important, Troy. Where I see a lot of people go wrong is they talk about wanting to invest in positively cash flowed properties in their SMSF. And at the end of the day, we always encourage our clients to consider high growth options rather than this high cash flow options in their SMSF, because at the end of the day, you're not paying any capital gains tax on the growth of the property if you are selling it at retirement phase. Correct me if I'm wrong.
Yeah. Yeah, no, that's
And
true. Yep.
right, and ultimately, the value of that property at the point that you wish to retire is more or less the value of your super fund. So why would you ever sacrifice growth in property when buying it in your SMSF for $5 a week extra in positive in cash flow?
Yeah, yeah, you're right. I mean, unless I mean, if it's only a small amount of cash flow, you're getting a 6% yield instead of a 5% yield, but the five's going to typically the lower yielding properties typically have a higher upside on the capital gains front and vice versa. But you're right. Yeah, you sort of to be sacrificing 1% and trying to hunt down an extra 1% yield and potentially, losing the major upside in capital growth when it's all going to be tax free is it doesn't really make sense.
I really don't think it does. And I think that ultimately, if you're buying something in your super, I would want it to grow. And I would
Yeah,
want it to grow as much as possible, to take advantage of the tax environment, um, which in your super, it's pretty much your own tax haven, but you don't have to go to the Bahamas.
correct. Yeah, it's good. It's good analogy.
You heard that one before?
I've heard that one. It's a good one. Um, yeah, no, it's a very good one. I have to trademark that one.
You might.
Um, yeah.
Yeah.
So no, well, what is there anything? Anything? So when are you heading back to? Obviously, you're away at the moment. You're heading back. You're sort of getting some R&R before 2026 is going to be your record year, I believe, for you.
Well, mate, I'm actually working while I'm over here. We have a team over in Vietnam who we do the new build. People in Vietnam, we have access to a few investors over here that are interested in investing into Australia. And obviously, they can only buy under the FIRB rules, only buy brand new property. So yeah, it's a bit of R&R, but I'm also working over here. Got a great partner over here who we partner up with, and we yeah, he's got the buyers and we've got the properties. So yeah, next year will definitely be a big year for us, no doubt. The growth that we've seen between this year and last year was huge, and we really only expect the market to continue growing into 2026.
Yep. Well, James, I won't keep you for much longer. I know you're a busy man and you've got a lot on your plate. But I do thank you for joining us on the show, and look forward to catching up with you when you're back in Australia. And thank you again for joining us. We have James Anderson from Bluestone Property. James, thank you for joining us.
Thanks very much, Troy. We'll see you next time.
James, what's the difference between buying residential versus commercial property in an SMSF? Which one do most people sort of get wrong?
Well, I think that in commercial property, just because people don't know as much about it, and the structure is slightly different. We find that more buyers simply want to buy residential property. Generally the entry price point for commercial is a lot higher, and given that a lot of our clients' balances aren't you know 600, 700K plus, we just find that more people want to buy residential.
Yep. And I guess people sort of Aussies typically understand resi more so than commercial as well, don't they?
Yeah, absolutely, they do. I can see benefit to investing into commercial for sure. But people buyers really need to understand, and if they don't, they won't want to touch it.
Yeah. Yeah, I guess it's always good to understand what you're investing in. It's always a bit of a danger if you're investing in something you don't understand, right?
I think so. I mean, with commercial property, a lot of people invest into commercial property for the cash flow. I think
Yeah.
your cash flow is always going to be a lot safer in commercial property, but your growth might be a lot safer in residential. And I think if you're paying 0% capital gains tax and you're trying to grow your superannuation, then residential property might be something that you might want to consider as a priority.
What if so? Take me through the process. So, if someone wants to purchase a property, through their SMSF, can you take us through a little bit of the process about how they would go about doing that?
Yeah, absolutely. I'd highly recommend not buying a property first. I'd highly recommend speaking to a company like Blue Chip to ultimately understand if they've got the capacity to set up an SMSF. And if they do have the capacity to do so, using a company like Blue Chip to set that up. And simultaneously, while that's being set up, I'd be speaking to a mortgage broker just to
Yep.
understand what your borrowing capacity would be like in your self-managed super fund. That might take,
Yep.
circa 1 month to set up and roll over. And once it's been set up and rolled over, you can then go ahead with the financial confidence. You can then go ahead and look to purchase something.
Yep. Great advice or good guidance, I should say there. What about with what about have you had any sort of horror stories with clients that have sort of maybe set up an SMSF and tried to go and purchase the property themselves and maybe sort of got themselves in a bit of a tangle or sort of you got any of those sort of horror stories that you could sort of share with us?
People that have set up all I can really refer to is some clients that I've come across who said they've tried to set up an SMSF themselves and really weren't successful and just had no clue what they and probably wasted 6 months of their time and wish that they had found us and that means found yourselves as Blue Chip sooner because they like trying to set up an SMSF yourself is very it can be very time consuming and very confusing. You really would want to engage the services of a professional to do so. Otherwise, you might just waste a whole lot of time and waste a whole lot of headspace too.
Yeah, well, I do mention that in some other episodes. We talk about don't try and do it yourself, and sort of get some advice, get some guidance, get a professional to help you through it. So yeah, we've had a few of those stories as well. So it's it's always a bit of a tangle when someone comes to you when they've tried to do it themselves and they've sort of got themselves in a bit of a mess, and you've got to try and clean it up. With location, everyone says it. What does it actually mean for an SMSF investor, and what are some red flags, and what are the things you're looking for in some of these suburbs?
I think that location's important, but it's not just about what location you're buying, it's about what type of property you buy. A lot of people go wrong because they do a bit of research and they hear that this suburb is booming and, this is where we need to buy. But they don't even look at the demand profile of the local suburb, which is a bit more microeconomic. Every suburb has a demand profile, and that basically stipulates what kind of property and configuration of that property is the highest in demand in that suburb. So, for example, is it a three-bedroom house, a four-bedroom house? There are a lot of suburbs in Sydney where the demand profile is favoured towards a two-bedroom unit. Where a lot of people go wrong is they say this suburb's booming, the house, let's say the demand profile is favoured towards a three-bedroom house, but they've only got the budget for a two-bedroom unit or a three-bedroom townhouse, right? So they go ahead and buy in that suburb because their budget only fits a say two-bedroom unit. That's where people can really go wrong. So
Yep.
you want to make sure that your budget, that you've got, is ample to purchase the highest in demand type of property for whatever suburb you're looking at. And
Yep.
ultimately, I mean, if there's one data point that I think everyone should be looking at when buying real estate, it's what's the renter to owner occupier ratio. You want to be buying in areas that are heavily dominated by emotional owner occupiers. And if an area is driven by owner occupiers, that's going to drive prices up in the long term anyway.
Yep. And what about off-market deals? How much of the best property, how many of the best properties never really actually hit the market, and why?
Yeah, in hot markets, off market deals are exactly what you want. If you are buying in the right market that is growing and has a lot of demand around it, it's likely that properties that are on the market, they're going to auction, they're selling, well above the asking price, well above what they're worth. Being able to purchase off market properties as we do with about two-thirds of all properties that we do buy means that you are buying a property with zero buyer competition. And if you're buying with zero buyer competition, it means that the price that you're likely to pay is more affordable. And also, owners really do appreciate an off market sale because they don't want 50,000 people walking through their property. They don't
Yep.
want to, publicise the fact that their house is for sale.
Yep.
And typically real estate agents might charge a lower commission price if they do a quick off market deal. So owners are happy to take a lower price. So yeah, absolutely. You need to be looking at off market deals, regardless of whether you're buying in your super or not.
Yep. Good advice there. And what about how do you negotiate better deals than say the average person? What's your secret sauce?
Well, one of the key things is off market properties. That usually helps. The other part is it's really about relationships with real estate agents. I've got and that's really only done by time in the game and runs on the board. Because we do have a lot of time in the game, we are purchasing a lot of property. We've got really, really good relationships with real estate agents, and we find that real estate agents love dealing with buyers agents a lot more than dealing with the general public. So yeah, having relationships, and if you are looking to use a buyer's agent, you don't really want to be buying or working with a buyer's agent that's only been around for 2 or 3 years because they can't have had that many runs on the board and built those kinds of relationships with real estate agents in that time. I'd really recommend
Yep.
working with someone who's been around for minimum 4 years. Um, because it's in that time that they can get good purchases under their belt. And that's going to mean real estate agent relationships are strong, and you're going to be able to negotiate realistically the best possible price. The real estate agent is going to have they're going to play less games, if you will. And I guess finally, if you really are looking to do it yourself, you really need to understand what's driving the owner. What does the owner want out of the sale? Is it a quick settlement? Is it a long settlement? Is it, no finance clauses? Is it no, building clauses? Is it an unconditional contract? Think about what they want and try to negotiate towards that. That might help bring the price down.
Yep. And if someone's watching this and thinking, I want to buy a property in my SMSF, what's the first step they should take, and what should they absolutely not do?
Well, first thing that they should absolutely do is speak to a professional like yourselves, and understand if it's something that is going to suit them and their long-term investment goals, because it may not. Setting up an SMSF is not for everyone. So they need to understand, the various factors, and the only kinds of people that can coach them through that are people like yourselves. One thing that they should absolutely not do is they shouldn't just say, yep, I want to set up an SMSF, do no research and just go in and try set it up themselves.
Yeah, yeah, good advice. Um, but I think we've covered quite a bit. We've covered quite a bit today, and it'd be great to have you on the show when you're sort of back in the country, and have you in the studio to sort of catch up in person. But Yeah, thank you again for tuning in and allowing, allocating some time to come on the program. There's a lot of good information there. I know you've had some great success, and your clients have had some great success also over the last sort of 5 years with your guidance and your professionalism. So, but mate, thank you again for coming on, and enjoy the rest of your time over there in Vietnam.
Thank you very much, mate. I look forward to coming up and doing it in person.
Thank you very much, James Anderson from Bluestone Property Group. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.